Misconceptions is
So
run by
a few trends I think I would highlight. One,
Morningstar
so far we've
help
been
make quick work.
So Adam, having just joined the team recently, you've been in the unenviable position of having to explain to your friends and family what it is that you do. I often say that I wish I had a job that I could explain in one word, like a teacher or a doctor. Our discussion of what we do always requires a bit of an explanation. How have you been framing it with your friends and family when they've asked?
Well, I've generally framed it as thinking of Morningstar as providing an objective, unbiased view of the mutual fund industry. We're not an investment team that may have a vested interest. We provide a view both at the macro level of the industry as a whole and on fund specifics and how they're doing and whether we think that they're worth investing in. We look a lot at both macroeconomic factors, how those things might impact different funds, and anything that's fund specific, whether it's the parent, a change of manager, anything that we think may have a material impact on fund performance going forward.
Yeah, so there's two things I probably highlight out of that. One is we often get the misconception that we make predictions about which mutual funds are going to do the best or based on where the economy is headed. So what's our outlook for the U.S. markets or gold or for price of oil? The media often has that misconception when they call to ask us for our opinions. So that's not what we do. We're evaluating a mutual fund and the people running that mutual fund and their capabilities and whether we think it's likely that they'll continue to outperform in the future. And the other thing is just the misconceptions around the star rating. So whenever, if somebody's ever heard of Morningstar, it's most likely that they've heard of us because of our star rating. And that's a purely quantitative report card of how well a fund has done in the past. It's completely backward looking. Whereas, so we like to say it's a report card of how well a fund has done, not an aptitude test. So we attempt to fill that role, as you say. We attempt to offer people an opinion about how the fund should do going forward and whether it will be an attractive long-term investment going forward.
I was actually surprised, and the people that I've told have been surprised to learn that the analysts have nothing to do with the star rating. As you said, it's really just a report on past performance, and any investor can go to our website and look up a fund and see a snapshot of past performance and fees and the star rating, and those things certainly have value. They provide a nice overview of what's happened before, but in order to get an idea of where things are going forward, that's where I think we can really provide value. Right now, two of our analysts are out west conducting due diligence interviews, meeting with managers, trying to really get a feel for what they do. There's a lot that isn't on the page that can come out only when you actually meet with someone and see what's their philosophy. Does it make sense? Do we believe in it based on our experience? Other factors like whether the parent company is struggling, whether there's been a lot of manager turnover, whether there are other factors that may impact corporate culture that we may be uncomfortable with. Many people may not realize that a fund could change managers without telling you and end up having a very different investment philosophy that an investor may not be comfortable with.
Yeah, it's well said. I mean, one of the things that sort of jumps out at me too is I remember a prof telling me a long time ago that give me something that you want to prove and I'll find the stat to prove it for you. And the mutual fund industry is very good at sugarcoating things, putting positive spin on things that are not, on situations that aren't great. So whether it's a manager change, poor performance, changes at the company. If you're an unexperienced investor who doesn't follow the industry all that well, it's very easy to believe in what they're telling you. They're very good at sugarcoating it. And so I think that's where our experience can come in, as you say. A couple other areas that I think are worth highlighting that we do, we write stewardship reports on companies as a whole, so we give a grade to how investor friendly are these companies. And the other neat thing that we do is the Morningstar Fund Analyst Notebook, which I think the analysts have fun writing here, and that's just essentially an informal blog where we cover a whole wide range of topics, just interesting tidbits in shorter form. So I think it's worth, as you said, sort of stepping back and giving our viewers a 10,000-foot view of what we do. We're often so immersed in the details that it helps once in a while to step back.